Hello, everybody. It's Jeremy Whaley here. And listen, we're going to talk about the bear market. It's happening. It's happening right in front of us. And the news media doesn't even seem to know if they think it's actually a bear market or not. In fact, I even heard one person on the radio today saying that we've hit the bottom and we're starting another great bull market. That sounds crazy, doesn't it? Well, we're going to talk about that in this market update for May the 24th, 2022, moving into May 25th. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. I hope you're doing fantastic. And we're going to do a little market update on all the chaos that's going on. I've done a few of these over the last several weeks. We really started talking about this bear market last November, especially in our Sunday night profit picks. We've been updating this every week, very specifically there. But I've done a few of these that are publicly, and I'm going to do some more. In fact, I'm going to start trying to do at least 2 a week so you guys can start watching for these. As this bear market starts to pick up more steam, I think it's important that we know what's happening and we have a good assessment of where we are in the trend so we can make better trading decisions. So let's talk about it. If you watch the news media, they can't decide if we're in a bear market or not. We are, by the way. They can't decide, They like to twist it as many ways as they can twist it to continue whatever narrative it is that they need for that moment. And right now they need, for whatever reason, they need the narrative to be positive. But folks, it's happening. I mean, inflation's off the chart. Markets are down. Gas is through the roof. I mean, it's just, the economy is falling apart. It is in awful condition right now. And the one that is about to really hit big is the stock market. Now, the market's been crashing. Let's come over here and take a look at some charts here. I'm going to actually just do that one right there. What you're looking at is you're looking at the Dow Jones Industrial Average. I'm going to kind of zoom in a little bit here. I'm going to circle some key areas on the chart. This was the beginning of the year. That was January of 2022. This peak right here was November, beginning of December of last year, 2021. That's actually when we started forecasting almost within a week or two, pretty much every turn that we've had here. We almost have forecasted this perfectly because I actually anticipated a head and shoulders. Unfortunately, I will say this, the one thing I did wrong, we thought this was going to be the head, and turns out that wasn't the head. That was instead the left shoulder, and the head came in here as the peak that happened right at the beginning of the year. And then the right shoulder was this peak right over here. So outside of that, we've been pretty much spot on. And I will say, in my defense, the NASDAQ did peak in November. So we were right there. We just, we didn't know necessarily that the Dow was going to trail just a little bit. But as you take a look at it, I mean, it's pretty obvious at this point. We've got a series of lower lows and lower highs all the way through, lower lows, lower highs, lower lows. And now, as of this past week, we can actually start drawing not just this trend line on top, but we've drawn a parallel trend line down here. And you can see on the chart that we've sold off exactly to that price point. And we actually put in a support here right around 31,250 on the Dow. So that's where support is starting to build. We are oversold on this. Let me see if I can pull up my my oscillator, which I thought I had set up for us here, but clearly I didn't. Sorry about that. There we go. Here's your stochastics on the bottom there, and you see that we're actually oversold and crossing up. Now, whenever you see that, a lot of people will falsely assume that since it's crossing up, that the market is going to be bullish, but no. This would be a false assumption. Yes, it is true that the oversold needs to rally. That's not even the right word. It needs to ease up a little bit. In a bear market like this, it's very common for it to not come all the way back over to overbought. It could, but what's very common is for it to kind of ease up and then maybe come up to like 40 or 50% and then cycle back down and kind of oscillate down here. So don't buy into the... I don't even know what the right word is, false belief. Don't buy into the false belief that this thing needs to rally from here. What I'm expecting is going to happen with the market itself is what we started to see this week. This was my Sunday night forecast and profit picks. And what I forecast then is that we would actually see a bounce, which we saw yesterday and today. And I anticipated that we could bounce to any of these turning points or maybe go sideways a little bit here. Those are really my primary outcomes. And that, like I say, that was 2 nights ago. We've really fulfilled that. We could continue selling from here. That's very much in the possibility. Let me kind of draw out the 3 or 4 options that we've got here. The first one, the one that I think is the most prominent likelihood, is that we would actually bounce up to around 32,400. We're almost there already. That would look like another 400 or 500 points rallying in the Dow. And a lot of people would start to buy that, but you're going to notice that you start to intersect very quickly with your 20-period moving average. And that's probably about as far as we could go. That could take another week or 2 to fully play out. And then I would anticipate that we would have selling from there. So we'll call that forecast number 1. The second way this might play out, I'm going to say it's a little less likely, but the other way this could play out is it could rally fairly good, fairly well, fairly high, whatever term you wish to use there, up to around the mid, right around 33,000. And you'll notice that your 50-period moving average starts to connect there. And depending on how long it took to do that, if it took long enough, it could potentially intersect with this trend line here. I don't think that's going to happen. I do think this rally is a possibility. It's a strong number 2. And that's actually probably like a 2A. We'll just call that a 2A. My 2B, let's see if we could do this maybe in orange. My 2B. Equal probabilities here is that it will go sideways and then down. So we'll call that 2B. Okay. So those are all very similar patterns right there. My third option, however you wish to count it here, is that we would just start selling tomorrow. And I don't think that's going to happen. I really don't. I don't think we're going to start to see that kind of a sell-off in the next day or 2. It could happen. It would take an event. And that's why this is my least probable option for now. All of them include bearishness. All of them include further declines in the market. It's really just a matter of the timing of it. And the reason I say this is my least likely is because for that one to happen, it will need to be event-driven. Now, there's a lot going on in the news right now. And there's a lot of events that could look like a trigger point to make this happen. So it could go anywhere from a Fed decision to political unrest to, I mean, it could be anything. I mean, it's 2022. It could be anything. So that is definitely a possibility. The one that you don't see is you don't see a big bullish trend. I mean, the only way you're going to see that, we could potentially, and this was really my 2B, we could maybe see that rally over to this trend line. Very, very unlikely. I put that at the absolute least probable. All of these forecasts are bearish. I don't see the market rallying from here. We've got a lot more to go. And something that I've been talking about in our live classes, I'm going to just bring up for you here, is, well, this might be a little advanced, and forgive me if I get a little too advanced, but I'm going to do it. I'm going to collapse our stochastics here, and I'm going to go way back in time. Oops, that was the wrong way. Let's do it that way. Try it there. There we go. I'm going to go way back in time, and what you're going to see on the chart here is you're going to see from 2009 all the way to current. So this was the last market crash back here. I've done some other videos on the 2008 crash and how the current one is paralleling that, and basically it's a mirror version of that. But what I want to show here is this whole bullish trend has never been retraced, okay, from the bottom of 2009 to the top here. Some could make the argument maybe that 2020 was a retracement of that, but it really wasn't. This whole bullish trend, this entire move, needs to be retraced. And so to help you kind of get an idea for that, what I'm going to do is I'm going to actually pull up our Fibonacci retracement tool. And these are rough numbers, but they're pretty close. I'm going to go from the top to the bottom here, and I just want to kind of show you how remarkably close these fib lines are to some of the numbers that I have marked out for our targets on these retracements here. So the first one, I have said that our next major bottom is around 30,000. And you can see that that's actually a Fibonacci retracement here as well. Depending on which way you count it, that is a 236 retracement. That's basically a 23% retracement. The next one, I've targeted, we could potentially stop at 29,000, and that's because we got so much resistance and support right in there. And then the next mark that you see in here is right around the 26,500 range. And look right in here, there's a line right there. This is a fib line, and that happens to be, again, depending on how you count it, it's a 382 retracement. It looks like it's a 618. It's an inverse, so however you choose to look at it there. But look how close those are. That's at 25,000. So somewhere in this range right in here, 25, 26,000 is a very, very, very good target. And then the big one is 18,000. That's the mark that I've got on there. And you just take a look at this. That is the 618 retracement. Okay, now there's also a 50% retracement sitting in here at 21,000, roughly 21.6. But the one that I have targeted, and I've been targeting this since November, is 18,000. By the time this whole bear market is done, I do believe we will be at 18,000. Do not expect for it to go there overnight. What you should expect is to see selling and rallies and sellings, and eventually, over the many months to come, I do believe we'll be at 18,000. That will be a perfect retracement of that trend from 2009 to current. And look, it's going to be scary to a lot of people, but you don't have to be scared because there's just so much opportunity. There's opportunity in trading the downside. There's opportunity in shorting options. Let me say that differently. There's opportunity shorting stocks. There's options that you can play. There's just a lot of ways you could do it, and you can just sit on the sideline. But the good news is when this whole thing is done, you're going to have one of the greatest buying opportunities of your lifetime. So the bear market is definitely here. Let's come back to full screen, and I'll give you some numbers. I think I did this last week. I can't remember if we actually sent this one out or not because I've done so many of these. I think this was actually just to our private group. I don't think I did this for you guys. But if you look at where we started, the beginning of the year, we were right around 36,000. Actually 37,000, right around 37,000. And we hit the low last week down here. The intraday low was 30,635. So let's just do some quick math here, and I'll give you the numbers on this. Having started, if we started at 37,000, there it is, 37,000. We'll take out the 30,000, what did I say it was? 30,600 or so. That's 6,400 points that we've given back. Divide that out by our 37,000 point index. And from the top, we're down about 17% from the beginning of the year, which is also from the peak. But what's interesting is if you come over here and take a look at the NASDAQ, the NASDAQ has been leading the way. And you can see that here. The numbers on the NASDAQ, almost 30%. I mean, it's just been stunning how much the NASDAQ has given back. And you can see I've got these fibs drawn on here as well. I'll zoom out a little bit for you. And you can see these lines all coming in here. Big targets in here. My ultimate target, I'll tell you, for the NASDAQ is around 7,000. I'll just kind of spoil it for you. It's about 7,000 is the ultimate target. You got some other pivots along the way, right around 10,000. You got a 50% retracement. It's right around the 9,000 mark. So you got several in here that would be reasonable targets. But we've already given back 30% almost on the NASDAQ. And we're just getting started. So this is going to be a deep bear market for sure. Timing-wise, I'm expecting this is going to go through most of 2022, probably into 2023. And that would be consistent with what we've been forecasting. So that's really your update on that. The NASDAQ is very much in the bear market. Let's take a look really quick at the S&P 500. And again, very much confirmed in the bear market. Serious lower lows, lower highs. We're pretty much at the immediate target here. I'm expecting a little bit of a bounce for the S&P as well, just like I said for the Dow. A little bit of a bounce, maybe up to around 4,100, and then we'll see that thing continue. And next target's 3,500, 3,200, and just start working your way down, because that is what is to come. So lots of interesting things going on. And like I say, I'm going to be doing more of these updates for you. I realize that a lot of you are maybe not getting good information, not getting access to good analysis along the way. So if this is helpful for you, then fantastic. That's what I want to do. I want to help you out. In the meantime, you say, well, where can I start investing? Where can I buy? What can I jump into? And there's a lot of opportunities for you. You could look at things like exchange traded funds. You could specifically look at inverse funds like the SDS fund or the QID fund. These are going to go up as the market goes down. So those are certainly some opportunities for you. And another area that I really think if you've not paid attention to, you need to start looking at Bitcoin and blockchain. Now, don't laugh at me. Some of you are like, I'll never trade crypto. I don't understand it. But you need to. You need to understand it. This is the technology of the future. It is the financial system of the future, not specifically Bitcoin, but blockchain and crypto in particular. So if you've not understood that yet, if you've not gotten into blockchain, if you've not gotten into crypto, you really need to learn how to do that. And I've got some training for you that I'd love to share with you. So I'll start you off here. We've got the 7-day crypto challenge. This is actually the perfect place for you to start. If you've never traded crypto, if you have no background in crypto, go to my 7-day crypto challenge. You can actually reach it directly. Go to 7daycrypto.com. And it'll take you here, and it's free to register for this. You can also, I'll put a link here below the video so you can link over to that. But if you go to the 7-day crypto challenge, you're going to learn all the stuff you need in just 7 days. So 7 days from now, you're going to get some daily action steps. You can decide if crypto trading is right for you. You'll know everything that you need, and it's free. So you have no excuse. Now, if you're ready, if you know a little bit about crypto and you're ready to go to the next level, well, I've got my crypto accelerator as well. And this is the more advanced training. And you can go here to my website. I'll put this link below as well. And this will outline it. You know, we get into just all the details, the technical trading theory, the Dow theory, all the advanced stuff so that you can really be a well-rounded crypto trader. Both of those are available for you now. Like I say, the 7-day crypto challenge is free. And that's a great introduction. It's a primer. You'd be shocked how many people I have go through that have never traded crypto. And they come out and they're like, wow, I totally understand it. You would also be surprised how many people I have go through it who have been trading crypto and they say, I can't believe I never knew this stuff. So it's a great training, if I do say so myself, for those of you who are new to crypto. And for those of you who are looking at it and saying, well, the crypto market's down 50%. Yeah, it is. It is down 50%. And if I come over here and give you a quick chart to just kind of tease you on this, I'm about to do a update on crypto as well. But you're going to have to watch the next video for that. But take a look at this. Look where Bitcoin is. It is right at my target, which means, folks, if this starts to build the way we think it will, we are about to start having buying opportunities with crypto. I think we're almost there. We've got a few things that need to be met in terms of criteria, but we're very close to that. So when we think about opportunities that are happening now, crypto might be the best opportunity. Like I say, I'm about to do another update on that, so you can watch that. You can look for that. I don't want these to get too long. But if you're interested in, now opportunities, look at inverse ETFs and look at crypto, and specifically know what you're doing with crypto. I don't want you to just go out and start buying crypto. Take my 7-day challenge so you really understand the buying signals. And then when you get those buy signals in crypto, which I think are about here, we're very, very close to that. If we start getting those buy signals, that's the time. So lots of great opportunity there. All right, folks, listen, if you're not subscribed to my channel, please get yourself subscribed right now, wherever you're watching this. If you're watching it on YouTube, if you're watching it on Telegram, or if you're over on Facebook or wherever it is that you're watching it, get yourself subscribed, like it, thumbs up it, join, whatever you have to do. And that way you're going to get all the updates that we push out. And if you're not on my mailing list, then you should do that as well. So just go to my website over at trademaestro.com and get joined up there. And of course, take the 7-day crypto challenge. All right, folks, hope you've enjoyed this. I'll have some more coming to you soon. And until then, happy trading to all of you. We'll talk to you soon.